1,297, and this is looking pretty good. Sandeep Bhatia is with us, Head of Equity India and Country Head India, Macquarie Group. Sandeep, great to have you with us here. Thank you very much. Welcome back. You know, the last time you were on the program, you said our big anti-consensus call is long IT. It is this morning with a 3% pop, a big rally on the Nasdaq as well. How would you take it from here? Okay, I think we lost the line with Sandeep. We'll try and repatch that and come back. But the move is extending in the IT services space. If you can have these intradays up, so Infy, Techem, HCL Tech, Infy is up 3.5, Techem is up 3.5, HCL Tech is up 3, Mindtree is up 4. There is Persistent, which is up 4.5%. The stock's at about, what, 38, 31. There is Birla Soft, which is up 3.5%, of course, and I mean, it had company-specific issues. eClerx is up 8%. So yeah, it's a pretty broad-based rally. Sandeep is back with us, Sandeep Bhatia of Macquarie Group. Sandeep, good to have you with us here. We lost the line there. The last time you were on the program, your call was, you said it's anti-consensus, but it's long IT and it's working. Is it the start of a very constructive move from here, in your opinion?
I think yes. I think what we have seen in the last week or so is that the worst case outcomes of the Republicans sweeping both the houses in the U.S., continued deadlock, higher inflation in the U.S., all those worst case scenarios have not come to pass. I'm reminded by a quote by British poet Samuel Butler. All animals except humans know that the primary business of life is to enjoy it. I think this is the time to sit back and enjoy what's happening in the markets. But yes, I think IT will continue to outperform. It's value there. It's definitely better than expected outcomes on the US macro, which is helping.
Okay, sometimes we forget to enjoy the simplest things, right? Thank you, Sandeep, for that reminder. Much needed reminder. But overall, I mean, how are you feeling in general about the markets? Do you think that this is the start of perhaps a big wave on the upside? I'm asking because, the global worries are now subsiding a little bit. Indian earnings are picking up in a big way. How are you reading into the internals?
Good question. I think India's big wave has started some time back, and it will continue to gain strength. Two things are helping us. I think the rest of the world will continue to be in a zone of conflict, flux, and uncertainty. That is not going to go away. Hopefully, that does not come to a pass wherein a lot of things go wrong simultaneously, and that hurts India too. And we are definitely going to watch out for that. But right now, I think that wave has started for the last 18 months or so and should continue. More importantly, I think for India, earnings growth held up better than expected than most people thought. I'm not talking about just this quarter. I think the expectations for next 18 months to 24 months is also now seeing more solid outcomes. So yes, we are in the middle of a good wave, which should continue to build from here on.
All right. Hi, Sandeep. I recall when we chatted last, we were talking about 14 to 18% growth, Nifty EPS growth for the next couple of years. Going by what's happened in the past quarter, do you think there's a risk to that? Because there are some cautious tones now coming in there that maybe we don't get that 14, 15% earnings growth. Your take?
I wouldn't be so much in a hurry to come and cut earnings. Yes, there are some cautious undertones. I think a lot of these undertones also is to an extent created by what people hear and what people perceive about the future of the global economy. At least for now, on that count, in the last 24 hours or so, we have had better news. So, my expectation is that even the companies themselves sometimes get surprised by operations. They did get surprised by the strength of the recovery post-March this year, which India saw. I don't think anyone was calling that in November, December in 2021. And that was clearly a positive surprise. Some of the cautious undertones may be founded in business conditions, but is also impacted by what people hear and what people get to hear on media. And to some extent, some of that the worst of that has not come through. So I would not be in a hurry to rush and cut numbers, but I would still say moderate earnings, mid-teens earnings is definitely possible.
Sandeep, although, I was looking at how FY23 Nifty 50 earnings estimates have moved, right? I mean, from a high of expecting almost 16-17% growth 3 or 4 months back, that number has fallen to around 13%. And I spoke with a couple of head of research at various brokerages. They're saying by the time the year is over, it could be down to 8-9% types. They're yet to put those numbers down, pencil those numbers down in published reports. Is that a risk? How much of that is a risk, Sandeep?
Earnings cut risk in India has been de rigueur, so it always happens. So I would think that risk is maybe up to a third. That's where it is. Whether it falls down to single digits, then definitely it's not great. I would say maybe 12% is where I would put it, but to put it down to single digits would definitely not be great. Then if we see that kind of earnings cut coming through, then we clearly have, basically we have achieved all the upside we are seeing right now. It may not mean that we see big cuts, but then essentially we seem to drag for a couple of months. Let's wait and see. I think at least the festival seasons went well. Let's see what happens around the Jan-Feb period.
Any sector that you are a bit cautious on now, Sandeep?
I think cautious is mostly on valuations, on consumer. We have always said that earnings seem to be very muted right now for that sector. So that's the consumer staple sector where clearly there's some caution. Longer term, we have to look at what happens in the broader, automobile space with the transition happening to EVs, CAFE norms coming in, and pressures coming through on businesses. So that's clearly something that we need to be aware of. So it would be autos and consumer staples. Autos more in the longer term after 12 to 18 months.
Okay, all right. Sandeep, what about these new age themes? They have gone through a torrid last 1 year or so. Most of them have come off from the top. Now there's plenty of supply that could hit. So if you were a buyer, then you will be spoiled for choice. The question is, would anyone still be looking at these names? Do you think that valuation-wise, they've come to a decent level, or would you completely avoid it?
I think valuations have come to better level than what we saw in the last 12 months, as you just said. But I would still want to avoid these names in the next 6 months. We still need to settle down on interest rates. Interest rates are now expected to peak by March. They were expected to peak after June next year, but they are now. The view is it will be March. I would basically play this in the April to June period once we have seen a peak of interest rates. That would be a better time to look at the new age stocks.
Okay, all right, but that would be a better time. Under this umbrella, by the way, I just want to point out that the markets are still holding up in fine shape right now. The Nifty is still above 18,300, so we're just about 50-60 points away from that 52-week high. In terms of stocks, it's once again PSU banks that are making their presence felt. Union Bank, Bank of Baroda, UCO, Indian Bank, all sitting at fresh 52-week highs this morning. So just take note of that. And then you have something like a Bharat Forge, Ramkrishna Forgings doing very well right now, up about 1.5%, fresh highs there as well. In this PSU banking space, I just wanted to understand, Sandeep, has it become a long-term call now? Because for the last decade or so, it hasn't really done much for long-term investors. Of course, it's been a great trading call recently. But what are your thoughts here?
The PSU's basket, whether it's oil companies, whether it's banks or other businesses, to say it's a long-term call is saying that the governance is permanently improved, policy stability is there for despite changes in oil prices or changes in the macro in India. I think that would be a tall task. So these would be names which we would play when things are doing well, and that's exactly what's happening with PSU Bank. So in that context, we have always said we like State Bank of India, and the next in line is BOB, Bank of Baroda. And these are the two names for the banking stock. But a long-term structural play, buy and hold and forget. Yeah, I would not be pushing them as such names. If that happens, a lot would have changed in India. We are not there still.
Okay, all right. Thanks so much, Sandeep, for stopping by, filling us in with your take on a whole host of sectors. IT is something that you called out earlier. You continue to like that. And the other themes as well that we just spoke about. Wishing you a good day ahead and a good weekend as well. Well, Berger Paints, that's the one that we're going to be focusing on next. Remember, the numbers were pretty good, actually. We did see, gross margins. They were a little bit low, but otherwise, the numbers on the whole, they gained some market share as well.